What up, Hyperchange? Welcome to another episode. Today I'm doing an update on Reed's Ginger Brew. This is a microcap craft soda company that I covered about 6 months ago that was in the middle of a turnaround, and I wanted to do an update because a ton of stuff has gone on behind the scenes. Came out with my episode in March of this year. In April, just a month later, the company announced that its founder and CEO, who had led the company for 30 plus years, Chris Reed, was stepping down from his role as CEO into a newly created role of Chief Innovation Officer. This was a long time coming for everybody following the company. Chris Reed is an incredible brewmaster, beverage industry visionary, but has unfortunately a history of over-promising to shareholders, under-delivering, not being able to run the company profitably. Therefore, the company is trying to get him more into a product-focused role and has the potential to be a super exciting development. All of this change is being orchestrated by John Bello, who is a beverage industry vet, titan, who came in on the board of directors in late 2016 to lead this transformation and has been doing an impressive job. He is making Chris Reed step down in the role of Chief Innovation Officer. In addition to that, he brought in an interim CEO from April to July by the name of Stephen Freeman. He was there for 2 months and then has now transitioned in the role of COO as they brought in a permanent new CEO by the name of Val Stallweer. So now we have these 3 new beverage industry titans who have joined the company just the last year. This trifecta of management, along with Chris Reed, is what we are looking at to create Reed's 2.0. Now, unfortunately, the company's financials have been pretty awful thus far in 2017. If you'll take a look, in the first half of this year, sales are down about 18% from the first half of 2016, down even more from the first half of 2015. Gross profit is down, operating income is down. This is all heading the wrong direction. The biggest reason for this is because Reed's had supply chain issues in late 2015 when they weren't fulfilling orders. A bunch of distributors dropped them, and they've been trying to win back shelf space, but the bottom line is it's not that easy. Remember, even though these guys are natural, even though they're craft, they're competing in the soda segment, which is just losing shelf space overall. In addition to that, they've cut out over 70 SKUs since Val Stallweer took office. If you've been following Reed's, you know they have all these different types of flavors and quirky little products. They've been cutting that down to streamline and focus on their core brands, Reed's and Virgil's, and their core SKUs within those brands to really get to profitability. I think this is smart, but we haven't seen the fruits of any of this labor. And all of these struggles thus far in 2017, management changes, weak financials, have led to the company's stock price to fall pretty precipitously. Since I made my last episode, the stock was in the mid-4s. Now the company is trading at $2.25 per share. Now, I think there is still some hope for Reed's. On the company's second quarter conference call, they announced that they were seeing double-digit growth in their core brands, Reed's and Virgil's, now that they've streamlined and refocused them, and gross margins have continued to improve and hit 23%. Now, they do need to get a lot higher than 23%, and they said they are planning to get them higher, but nonetheless, it's very promising to hear management say that financials are finally turning around. But I will caveat that by saying that the management always seems to think things are turning around, but then when they report the numbers, they're not. So I think the market is frankly incredibly skeptical of this company. They only are going to believe the turnaround when they see the numbers, and we haven't seen the numbers yet, but I think a prerequisite to seeing good numbers is seeing a new management team implement a ton of strategic changes, which is exactly what's happening at Reed's. If this company can return to profitability, I think there is still huge upside. I think my entire thesis of Reed's having 10x potential from $4 a share is still intact if the company can execute. Now, hear me out. With 15 million shares at $2.25 a share, the market cap is only $34 million. By my estimates, the company is going to do about $38 million in sales this year. That puts the price-sales ratio at only 0.9x, which is very cheap for a strong, profitable beverage company, which Reed's is not. But if they become one, I think we see this multiple expand dramatically. For instance, the price-sales multiple of Coke is 5x, Pepsi 2.6, Dr. Pepper 2.5x. So these are all bigger soda companies, albeit well more established, far more profitable, but that shows you the kind of price sales multiple these beverage companies can command if they are run correctly. So that's why I still think Reed's has a ton of exciting potential, because not only do they have the ability to grow sales dramatically if they can figure out their product market fit, but they also have the ability to expand their price sales multiple on top of that, which would lead to huge upside. How are they going to return to sales growth? First of all, I think focusing on their core business and reworking their supply agreements with distributors in a professional manner could even boost sales alone. Additionally, they're working closely with Chris Reed to develop an entirely new line of all-natural, 5-calorie, 12-ounce sodas with no sugar. The company's pretty tight-lipped about what's going on here, but these are going to roll out with a ton of new SKUs for the Reed's and Virgil's brand in conjunction with an entire rebranding of all of Reed's and Virgil's packaging, logos, digital marketing, and all that. They're claiming that in Q1 2018, they're going to refresh Virgil's, and then they're going to refresh Reed's shortly thereafter. So this is a huge change for Reed's. If you've been following the company, you know that their packaging and design has stayed the same for years. I believe the Reed's Ginger Brew label, Chris Reed designed way back in the 80s when he started the company. Not that that's bad, but nothing has changed for 30 years. So I think it's fascinating that the company is going to reinvent their whole look and their whole brand image early next year, and that could be a catalyst along with these new beverages to spur sales growth once again and potentially turn the company around. That all being said, originally what I was most hyped about with Reed's was their fountain product. Offering an all-natural fountain product, I think, could take huge market share from soda incumbents Coke and Pepsi, and is a far more lucrative business than selling glass bottles and cans. But unfortunately, it looks like that entire fountain project has been shelved with the new management team. We haven't heard much about it. I still think that product has disruptive potential, but I'm kind of bummed to see it pushed on the back burner. Not really sure what's up with that so far. Yeah, to sum it up, I don't really have much of a conclusion on Reed's. The jury is still out there. They've implemented this new management team. The financials are still looking very bad. The company has only $251,000 in cash, $12 million in debt. They're an incredibly fiscally precarious situation, but that's why they're trading so cheap. And I think if they can finally execute here, the stock could be really exciting, because at the end of the day, these guys have incredible products, and Chris Reed is one of the beverage industry's leading innovators, and I wouldn't put it past him to come out with a hit soda and have this new experienced management team push it into the mainstream and really have Reed's fulfill this potential that I think all of us who've been following the company have seen for so long. One last thing I forgot to mention, John Bello, the chairman of the company, recently purchased about $150,000 shares worth of stock in the open market for about $250,000. He did this at $1.70 per share. This is an incredibly good sign. It shows that management has faith in the company. They're willing to put their own money on the line. That was also a good sign, but I'm just still not convinced because Reed's management has failed so many times. I need to see the numbers before I think the turnaround's actually happening. Anyway, that's Hyperchange. See you guys next time. Subscribe if you haven't already. Comment your ideas below. Peace.